Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita, Khemka, and my colleague.
Hello there, I'm Yatin Motas.
Well, Yatin, consolidation after a solid surge on Monday. Yesterday, of course, we saw the Nifty reclaim that 24,300 mark. It was a 300-point rally. Today, it was fairly quiet, although we did reclaim that 24,450 mark, albeit briefly, but fizzled out from the highs of the day and, just about managing to hold on to that 24,330 odd mark. So, managed to end the day in the positive zone nevertheless, but it was a fairly range bound session. The Sensex as well, 80,288 is where it's at. The mid-cap index outperforming 0.3% kind of gain coming in on the mid-cap index. If you look at the advanced decline ratio, that was tilted slightly in favor of the laggards, 1:1 even Stevens, but if you look at the NSE advanced decline ratio, 1200 shares advancing to 1370 stocks declining. So yes, it was tilted in favor of laggards. Almost all the sectors, ended in the red today, Yatin, barring the IT pack that was up by 1% or 1.2% or so. Even the energy pack managed to do well. Yeah. Yesterday, energy was among the big gainers, and today as well extending gains. But Yatin, want to say that some top names that have dominated the gainers list. Trent, of course, numbers came out, big beat on the margin front. Although if you look at the profit growth, it has gone down by 46%, but there were some exceptional items in the same quarter last year. So because of that, I think the profit figures like that. But if you look at the margin performance, very solid, 16%. Expectations were 13% vis-a-vis 15% in the same quarter last year, but it has come in at 16%. Even on the EBITDA front, on an absolute basis, EBITDA has come in at 656 crore rupees vis-a-vis a poll, the CNBC TV18 poll of 580 crore rupees. If you look at the other income, that's also risen quite a lot, 30% jump. We're still awaiting the internals, in terms of Zudio and how the segmental performance has been. But all in all, a big beat on the numbers, and we saw the stock reaction spiked to the day's high. In fact, the second big gainer on the index today. But the other stocks that did well today were the likes of Reliance Industries. Yatin, it has cleared that 1400 mark, and that was being pegged as a very important level for the stock of Reliance Industries, and it had managed to clock that today. 1399, very close to that 1400 level. Aside of that, if you look at the defense pack, continues to rally amid all the tensions between India and Pakistan. So you had Bharat Electronics among the top gainers on the index, 4% higher on that stock. Eternal, HCL Tech, Tata Consumer, Infosys, Bajaj, Finserv, that also reports numbers today. IndusInd Bank, HDFC Life, these are some of the other movers. On the flip side, Coal India, Ultratech Cement, although brokerages are bullish on the stock after the company reported good numbers, but the stock was among laggards today. ONGC, Sun Pharma, Dr. Reddy's, some of the steel names like JSW Steel, even two-wheeler makers like Hero MotoCorp were under pressure. But Yatin, as I was mentioning, defense stocks continue to power ahead. All these shipbuilding companies were higher in trade. And of course, also Tata Tech, there was a big deal. That stock was down 6% or so.
Yes, I think, a lot of stocks that made the headlines in the mid-cap space. If you look at the defense stocks, another day of, moves coming in. 5 to 10% is the kind of gains that we saw on an average for all of these defense stocks. In fact, the defense index, it looks, now at a record level. What was doing well there, which was Cochin Shipyard, Mazgaon Dock, Data Patterns, GRSC, those shipbuilder companies clearly moving 10% each. India Cements post, commentary from Ultratech Cement, that stock moved 10% in trade. What was also doing well is the likes of Aditya Birla, AMC, Prestige Estates, India Mart, UCO Bank. In fact, UCO Bank reacted positively to the numbers. What was not doing well is Go Digit post the numbers 6% down. Tata Technologies post the block deal, wherein private equity player and one of the largest shareholders, TPG, sold nearly 5% equity at a price of nearly 670 odd, and that stock saw a 6% dip post that block deal. SBFC, CRISIL, TVS Motors saw some profit taking post the quarterly numbers, and so did Castrol, 3% down for that stock as well.
All right, a lot of result reactions, and so is the case for a TVS Motor, although numbers came during market in the dying hours of trade yesterday. but the stock was reacting today, after the management comments in the con call as well, and we had the brokerage verdict
Yes,
as well
yes.
coming in today. So the stock was down 4% despite a very strong performance. Just taking you through very quickly, taking you through the performance. 75% jump in fourth quarter net profit. Revenues were up almost 20%, 17%, so to say, on a YOY basis. Margins came in at 14% vis-a-vis 11.3%, but it factors in the PLI benefits for the full year. I think this is one factor that some brokerages have pointed out, that if you exclude the PLI benefits, the margin performance has been so-so. But even then, it has been in line with expectations in terms of margins. In terms of the con call commentary, the outlook has been positive, especially on the export front. Even one of its key export markets, Africa, the company said that has hit the bottom and it could only improve going forward. But they have also sounded some caution that FY26, the first quarter of FY26, is expected to moderate a bit, given the fact that there is a high base effect if you compare it to the same quarter last year, which is why the first quarter may be a little moderate. But they have also said that the May-June period will be good due to the wedding season. So all in all, the commentary is fairly okay, and they have said that FY26 growth wise will be similar to FY25. Now, taking stock of what the brokerages are saying and why they are fairly mixed when it comes to their verdict on TVS Motors, let's take you through the bullish views first. Jefferies has said that we are retaining a buy call here. Target price has been raised to 3,300 rupees. They are expecting 13% volumes in terms of growth and 24% EPS compounded annual growth rate over FY25 to FY28. But they've also said that at 40 times FY26 PE, valuations look a little rich, but it is sustainable on the back of strong growth as well as improving franchisee. Morgan Stanley, an overweight rating here as well. The target price is at 3,126. They have said that PLI benefits, of course, are playing out for the company, but it could also, the PLI benefits incentives could also increase going forward, and that will bode well for the company. The competitive intensity in the electric two-wheeler space is also peaking out according to Morgan Stanley, and that will bode well for the company. And of course, the company has had a rising market share when it comes to scooters. Export growth has been healthy, and the product cycle has also been pretty strong. So in that sense, Morgan Stanley is fairly bullish. Nuvama also overweight. Target price has been somewhere around 3,200 rupees from 3,100 rupees. They have said that the company will continue to gain market share. The FY25 electric two-wheeler market share was somewhere at 20%, which is higher than the ICE models. And they've also said that the company is better positioned when it comes to the EV transition as well. They've raised their FY26, FY27 EPS estimates by 3% each. But Citi is fairly cautious. They've said that if you adjust the PLI benefits, margin growth appears modest. They've said that the competitive landscape is tough and sustaining high margins for the company may be a tad bit difficult without any PLI support going forward, if at all there isn't any support. That would be challenging, but it is still expecting TVS to gain market share. But demand when it comes to motorcycles for TVS has been dwindling, and that has been an area of concern. So I think that's one concern that has been flagged off by the brokerages. But given the fact that monsoon is expected to be good, demand may pick up. Of course, we've seen that for a lot of these automakers, there was this issue of rising inventory, lower demand, but all that could reverse given the fact that we've had tax benefits in the budget, and urban consumption also picking up, and rural consumption also picking up in light of good monsoon. So things should bode well, and as management has already said that FY25, FY26 would be similar to FY25 in terms of growth. So yes, some bit of hiccups in terms of how April would turn out, given the fact that there's a high base effect, but all in all, looks like it is going to be a good year for TVS Motors.
In fact, numbers are not that bad, Nandita, but yes, concerns on the valuations, on the kind of demand that we could see moving forward. Valuations nearly approaching 30 times FY27 earnings. So most of the stock move is pricing in the good margin surprise. But moving to technology and KPIT Tech's earnings have been slightly disappointing. They did not mention about the guidance for FY26. The stock post the numbers yesterday fell. Today morning also there was some bit of correction. But if you look at brokerages, they have maintained the hold when it comes to HSBC, and they've cut the target price to 13.25 per share from 14.40. Now, KPIT Tech largely is dependent on orders from electric vehicle manufacturers and probable high-end luxury car designing as well as the kind of tech that they use for the internal avionics as well as the designs. Now Q4 according to HSBC has a lot of headwinds. Probably in the first half of FY26 things would look softer. Obviously the management also was of the view that H1 would be slightly soft. We could see some pickup in H2, which is the second half of next financial year. However, the management is guiding pickup only after second half of FY26, which brokerages believe could depend on geopolitical issues as well as the trade war jitters that would be in the marketplace. In fact, FY26 according to HSBC could be a year of moderate growth and stable margins. So let's see how things really move, because luxury car makers like Porsche have refrained from giving guidance. In fact, they are expecting overall sales to get slightly slower than what it used to be for the past 1 or 2 years. So yes, when it comes to the overall business of KPIT Technologies, which is largely linked to autos, some bit of slowdown can impact the overall margin profile as well as the growth profile.
That's true, Yatin. I think the street is fairly cautious, especially when it comes to companies that are refraining from giving guidance. Infosys being a case in point, people were scared that the company may not give guidance, although it did. But for a lot of these mid-cap companies, barring Cyient and now KPIT Tech, I think most of them have stuck to the guidance or given better guidance than the large cap IT names. But Yatin, Indigo also in focus in the wake of all the tensions between India and Pakistan.
Yes, see what really happens with hospitality and aviation is when there is geopolitical tensions, especially in the past you have seen whenever there is some India-Pakistan issue, the hotel industry as well as the overall travel industry gets impacted. Now there is a report by HSBC with a target of 5975, and the closure of Pakistani airspace for Indian aviation would mean some bit of impact. Now we know that Indigo is looking to expand its international operations, and kind of geopolitical tension in the short term could hamper those plans. In fact, according to HSBC, nearly 4% of Indigo's total capacity could get impacted because of the airspace closure of Pakistan. What it really does is that you need to do a detour and clearly fly at a higher distance, which could clearly impact margins as well as fuel consumption. Obviously there is no short-term profitability impact according to HSBC, but they believe that the impact could be larger for its peers like Air India, which operate a lot of international flights, especially the flights from Delhi will have to do a detour and travel even more when it comes to Europe as well as other Western countries because of the airspace closure. In fact, the international schedule could see some changes if the Pakistani airspace remains closed according to brokerages. But yes, be it Indian hotels, Interglobe Aviation, all of these stocks are slightly nervous for the shorter term, given the fact that the geopolitical tensions are expected to rise by the market participants.
That's true, Yatin. Longer flight durations, and of course they've cancelled 2 flights to 2 countries, Kazakhstan and Uzbekistan, till the 7th of May. And around 50 international routes operated by Indigo will require longer sectors as well. So yes, lots happening on that front. Of course, brokerage is also flagging off. But we are in the middle of results season. Lots of numbers to watch out for this week as well. Even Bajaj Finance and BPCL, I think, just came out with numbers. Bajaj Finance, we'll be reacting to a lot of numbers tomorrow, especially Trent. We'll see what the street verdict is, and as we get more and more internals, we'll see, because the stock has been fairly beaten down when you look at the performance over this year. But today it saw a good bump up in the dying hours of trade. Let's see how things pan out tomorrow. But I think with that we've come to the end of this edition of Closing Bell. Thanks a lot for tuning in. Stay tuned to Money Control. We'll be back with the markets tomorrow morning at 9 AM and have a great evening. Thank you for watching.